Hello everyone, welcome back to another episode of Australian Weekly Real Estate News Highlight. This is another hot week in Sydney in terms of weather and also in terms of the market as well. There's been a little bit of rain, but that didn't stop anyone from going to the auctions or buying properties, which we'll review very soon in the following news articles. Before we start everything, if you like our video, please make sure you subscribe, forward it, or make some comments, and then whatever that you want us to talk about, please let us know, and that would be the strongest support you can do for us. Another thing is I want to thank you for our sponsor who sponsor the program Plus Agency. They're Sydney-owned, Sydney-based agency who have offices in Chatswood, in Sydney CBD, and also in Double Bay, and another one in Shanghai. So if you are looking for the high-end luxury property, especially apartment market, please tune into the channels of Plus Agency, who would offer the best value products on this market in most times. With no further ado, let's start with the article today. First one, broken down houses and broken down terraces and trashed properties are actually pretty hot at the moment. So this one in Redfern, which we're gonna talk more about, deep into about this whole renovation frenzy that's happening in the market at the moment, are really making the market take off to the next level. And some of these older properties that's completely trashed sells even better prices than some fine renovated property. So, which is amazing. Take this one, for example. This is the place in Redfern. The owner has owned it for the past 80 years. It is located on George Street in Redfern, one of the more busier street. And the exterior is obviously very teared down. There's a lot of water damages on the wall. But if you go inside, the second level is inhabitable. The staircase is falling all over the place, and the inside of it is completely trashed. There is no single way that people can, habitat this particular area, and the story room at the rear are also falling apart as well. However, a property like this, because it's got 164 square meter on its own, and then there's a lot of potential renovation can be done to the property. People are actually going in like crazy at the moment. There's a lot of inquiries that flies through the door, and the price guide was even like $1 million, even though none of the place in this, there's not even one room in this property is habitable. People are still really just going for it. Same thing, in Waterloo, there's a terrace, no bathroom, and the ceiling, propped up by a cabinet, sold in August for 1.01 million. And then another Newtown property sold for 1.3 million in December. A buyer even paid 4.6 million for a grand but crumbling Darlinghurst terraces on Surrey Street last year as well. So it looks like people are really now into this type of renovation homes, or home need to be renovated. That leads to us to the next article about home buyers splurge on renovators' delights amid house shortages and booming prices. When people start to buy a lot of broken homes all over the place, this is the one which you see in Redfern. And then we have another one that happens in Paddington, which you can see this place doesn't even have a floor, and the fireplace was completely ripped off as well. A lot of bricks in there. This Redfern property has attracted up to 150 buyers that are open for inspection, and the price has been skyrocketing as well, even better than some new homes. And same thing for these Paddington places. Doesn't matter how broken it is, people just lighting up on the street. And then, this Henry Street house has increased price guide starting from 1.2 million, goes to 1.3 million, goes to 1.4 million. And you can see the people lining on the street. There's like over 200, close to 250 buyers groups inspect, this particular place in Marrickville, which is completely broken down. So a lot of work needs to be done. And the reason why I think now a lot of people to buy all these broken homes because there's just no new places on the market. There's quite a bit of a significant shortages in Sydney market at the moment for this type of property, like brand new townhouses, brand new or renovated places. There's very few of them, and whenever we get something like this, it will get sold really quickly. Another thing is that because the government had a new home builder grant, which if you spend $150,000 on a renovation, you get a $15,000 back from the government as a rebate or as a stimulus. So a lot of people really are now into this market to spend money on renovations to get them to get their own dream home built. And I guess it's also the low interest and how the market is making a lot of people start to jump into this place. And with COVID happened last year, there's a lot of upsiders in this market where they want an additional room as a workstation or workplace. They don't mind leaving a little bit further, but they still need a sense of space as well. So that sort of lead the market into the bigger, better, newer homes. Another news is about the Sydney real estate fireworks at auction of the 33 buyers slunged out of a 1950s time wrap. So you can see from last year, all these news articles that we've been talking about, all these projects we've been talking about, they're all new ones, big ones, renovated ones. And this year, especially from sort of mid-January until now, always see on the news article actually broken houses, chipped staircases, places with no roof or no floor, or what we call time wrap is like the place has been chipped for 50 years. That's what it means. And now obviously it's been sold as well. And price guide was around 1.2 million. And then later on revised 1.4 million, and now finally end up selling for 1.73 million after attracting 33 bidders to this place. And the place was sold for $330,000 over the result, and the highest price ever paid for a two-bedroom house in Markville. We're talking about a two-bedroom house for $1.73 million in Markville, where generally, the houses in that area, if you look at the data a few years back, you'll be looking at about early million. Definitely not 1.73 million, in this. And last year we have done an article from the database from the statistic from Rewrite. If there's 3 bidders registered for auction, that's a good auction. And if 5 bidders, that's a super good auction. And now you can see there are 33 bidders over one property, which is absolutely crazy. 250 groups coming through on this place. And then there's also another place in Earlwood, that was sold for $214,000 over the reserve, and end up at 1.614 million. And it's just also another very average normal house. You can see it over here. So it looks like the market, because the shortages of houses in the market, people start to go in and buy whatever. Broken down doesn't matter, high price doesn't matter, auction doesn't matter. They just want to get something for themselves in this market with the fear of missing out. Next one, Wentworth knocked down sales for $300,000 above medium house prices as market hits up. Another situation like this, this is a knockdown and rebuild. People buy them because they don't want to keep them. People buy them not because they want to live in this one. They want to knock it down and rebuild or do serious renovation on it. This one was it was on 22 Smith Street. And buyer pays almost $300,000 above the suburb median price for a broken down house. Where in general, a broken down house to be knocked down should be definitely below the median price of the area. But now it looks like the market is just going into somewhere that no one can predict what happens. It's just what people want. And if there's something people want, they pay whatever price for it. This is just so original 3-bedroom cottage in Sydney was sold at auction on Saturday for 1.24 million to a family who wanted to be closer to Parramatta. It is a big land, 607 square meter block of land, but you can see the backyard just all over the place. And the price guide was, even $240,000 lower than what was done in the end. And there are 17 registered buyers and 8 active bidders. And McGrath has done a job to put everyone together, but into this time wrap, we just have nothing special, but it just end up selling at amazing prices. And same thing is here, like a place just because it's got an R2 zoning, so a lot of people really try and just come in and get it. 31 registered bidders for another place at on the Morley Avenue, 20% above the reserve, which is just absolutely mad. So this is all happening in Sydney market, and you can see that apart from the new property that are being sold really quickly last year, now some old ones, unrented ones, whatever it looks like, it starts to shine on the market as well. Okay, let's take a look. So this is Celebrity Place, and what I'll talk about is not just about the celebrity, it's more about the apartment market in Sydney as well. So Larry has sold his Bondi Beach investment apartment for 1.055 million at the auction. And let's take a look at what happened here. Obviously, this is not a house anymore. And, for the last few weeks, people are asking me, oh, okay, so, the house looks like whatever it is, broken down, old, it gets sold because you can have land, you can renovate it, you can knock down, rebuild. Then obviously apartment would have the same thing, right? But if you look at this is a Bondi Beach apartment at Glen Street, number 16 Glen Street, apartment number 5, and that was sold for 1.055 million, which is $65,000 above reserve. And the original purchaser has only bought it for $400,000 back in year 2001, and had collected about $850 a week in rent. So it has been non-stop positive cash flow. So a lot of houses, when people buy them, they think, okay, the house will get a capital gain, but what they didn't consider is the house have a lot of keeping costs as well, especially land tax if you rent them out, and also the return yield as well, not as high as some of the apartments. So it's been positive cash flow for the past, 20 years, and now at the end of the day, he has also sold the property at a more than double prices. And then $65,000 above reserve as well. So you can see that this is the property. So it has been renovated a little bit, but you can see, the size of this window in the living area. And then if I'm not wrong, I remember this place has no parking neither. So it's a 2-bedroom without a parking. And I haven't seen any big balcony on this one at all. So it's like you can see there's no balcony and there's no parking. It's literally just one of this really old 2-bedroom, 1-bathroom type of property, and it just got sold. A B started at about 900,000, reason $20,000 increment to 980 before sold at 10,000 and 15,000 Bs. And at the end of the day, it was sold for $1.055 million. And 10 people was bidding over it. 150 groups went through the whole campaign, with 30 contract was requested. So it's just really, really strong. Oh, wait a minute, it does have a balcony, but at the back of it. Yeah, at the back of it, open up to both bedrooms. But anyway, we can see this is just absolutely amazing. And then, last November, there's another Bondi investment apartment, one better at Brighton Boulevard, purchased for $318,000 in 2001, and collect $600 rent a week, which is positive cash flow definitely, to an investor for $770 before the auction even started. So you can see in Sydney, if you buy in the blue chip area, if you buy in good location, even apartments, you still get some pretty good return in terms of capital gain. And what's more important is that there's no stress of keeping the apartment over the time of whatever happens. Okay. Another thing, let's go to the Hills, have a look at what happened there. So I remember I've talked about this property. I was looking for a new suburb record being created in Kellyville Ridge, and now it looks like the record has been set as well. So when they came out to the market, they said, I'm going to set a suburb record. Now, when the auction finishes, the record has been set. So at the end of the day, it was sold for $1.85 million, which is almost spot on the forecast of what the property will get sold for. And it was sold for at an auction in front of a 100-person crowd over the weekend. The place was number 1 Lachlan Court. And then it was $90,000 more than the previous suburb record hold on 22 Buckham Street, which was traded in 2018 for only $1.76 million, which at that time considered was absolutely insane prices. And now it looks like, whatever price you have, it's just not insane. It's insane now to get something. This is the look of the house. It is a beautiful, beautiful property. You can see it's just very nicely than the style of it, ceiling height, the functionality. It's even got a copy house at the back for 10-year retreat, or the home office, which is the thing in this market at the moment. So no wonder this place has achieved a record prices in this suburb. All right, next one, housing values shoot to record high amid low interest rate and rapid economy recovery. So we've been talking about this for weeks and weeks about, now we're slowly coming out of recession and slowly coming out of a bad market. Now we're moving into a hot market. And then what's leading the market is share value, and also so stock market has taken off and now it's dropped back a little bit. So a lot of people start to put the money back into the real estate market, and asset has always been the most popular property that people want to own. In this whole area, you can see in January, so now we've finally finished January, the 6th of February today. January, the house price has risen, ranging from 2.3% surge across Darwin to about 0.4% increase in Sydney and Melbourne. And in Sydney and Melbourne, even though it's only a little like 0.4%, but consider the whole price point and the median prices for Sydney at 0.4% in a month is actually not a bad result. And if you break it down into some suburbs, you can see even broken down houses are selling at a very high prices. Simply, we just don't have many strong stock left in the market, and we only have a very limited amount of stock in the market. And if you want to use the broken down houses to compete with the new houses, obviously the price point is not there. That's why I didn't create that significant increase, but 0.4% for 1 month, it's still not bad at all. And then from the head of research of CoreLogic, Eliza Owen has said that this time it was fundamentally different from year 2017, which was another boom. Last time it was led by capital city investors in Melbourne, Sydney. Now this time is being led by first home buyers and buyers in regional areas, which means this time when the properties start to increase, it was led by people who really occupy them, who actually live in them, where before it was led only by the people who invest in them. So it was different because when you have a market where everyone owns a home, it's a stable market. When majority of people are actually buy to live in, there is no bubble because people buy to occupy them. And that's what it is. So across the board, it was the same thing. Fortunately, last year, 85 out of 88 government suburbs has got a gain. But at the end of this year, I will see that probably that will become 88 of 88 suburbs that's going to receive a capital gain. There's a lot of data involved in it. I won't bore everyone with the actual figures, but you'll be looking at the house price grows faster than unit price in every capital cities for now. And later on, when house price everybody out of the market, that's when the apartment market is going to start to rise. Last article is how working from home has changed the property market. Obviously, last year during COVID time, we have switched a lot of things back online. A lot of people start to work from home. So, a couple of points that was struck everyone was where to live now, what we need. And then after now almost a year, COVID hit the whole world, people start to live slightly different than before. The first thing is there's a lot of DIY to be done in these homes. A lot of people started creating a lot of working space or working areas in the existing places. For those who can afford, they start to do upgrades or they start to move up into a bigger home. Renovation has significantly taken off places as well. So, people start to build additional study areas in their home. People start to deal with a lot more working space and how to find the balance between the working space, the kid space, and the wife space or husband space, and the rest of family space. So it's just becoming a trend where people start to think about more working functions into their home now. Rather before, it was just more about relaxing, entertaining. Also, the CBD market, or close CBD market across Sydney and Melbourne actually dropped a little bit simply because there's no migrants, no travelers, and there's no students neither to occupy these places. And because people now working from home, they don't need to live in the hustle, busy areas in the center of city, and they start to move into suburbs. So if you are taking a walk in the Sydney over the weekend, like I do, drive to everywhere to look at our sites and everything, you can see that in the suburbs, you actually have more attractions for people than the CBDs now. and then people are moving out of CBD, buying in suburbs or different areas because they can work from home. So it's not worry about transportation too much. They're just really thinking about the bigger size home, how to work better from home. And also the government has rolled out a home builder scheme, which any renovation above 150,000, people can get roughly about 10% of the money back from the government as a government incentive. So people now are not afraid of doing renovations in their own homes and creating the extra space for themselves. So it will be interesting to see what will happen this year in terms of people's living needs. And then now COVID start to lift off a little bit, we'll have a look about how the market is going to change again and how people now adapting to a world with a little bit less of COVID fear. All right, thank you very much for everyone, and that wraps up for the whole week. We have picked the news so that you can recap everything in a very short amount of time. If you need any more information, please feel free to leave us a comment or send us a message. I will see you next week. Thank you.